Hello, folks. Welcome back to the channel. It is your boy, TB here, S&B Trading. We got a lot to talk about today. We got our FOMC meeting coming up about 21 hours from now, coming up tomorrow. Big things going to happen. I really don't think it's going to be a lot of news, like a lot of new information at this FOMC. I think it's pretty cut and dry. I think we know what we're going to get. We're going to get that 25 basis points. We are 87% chance of it right now on the Fed Watch tool. We're going to get that 25 basis points, and it's really going to be listening to Powell dodge questions about are we done hiking? Are we going to hike more? He's going to weasel his way out of those questions, as he always does. He's going to do the typical, we're data dependent, we're going to wait and see, yada, yada, yada. They're not going to tell us directly, at least I don't believe they will, that they're going to pause after this last hike. I believe they will go, hey, we're data dependent. And then June's meeting, they will come out and they will say, we're not going to hike, we are going to pause. So I believe that is going to be exactly what's going to happen. I think it's going to be pretty obvious what's going to happen. That doesn't mean there won't be some volatility. I expect the market will make its typical huge swings up and down like it usually does. Just the algos going ape shit. As always, completely expect that. You should expect that as well. But that is what we're going to be jumping into today is where are we going to go? Let's look at the technicals because we just know we're getting that 25 basis points. I mean, it's pretty certain right now. And we also know Powell, and another thing he's going to talk about, labor market. Labor market's too tight. He's going to talk about that on and on and on and on and on. Therefore, trying to justify why they're still hiking rates. They're going to talk about the banking crisis. We know First Republic just collapsed. I'm sure he's going to get some questions about that. He's going to dodge those as well. Say, yada, yada, it's not a big deal. It's not a contagion. It's contained, whatever. Typical things he's going to say. So, let's jump into the charts. We have our Nasdaq 100 futures right here. We have gotten some messy trading sessions. This last month of April was just kind of a shit show, to be completely frank. It was indecision. That is all it was. And if you look at this range that we were in this like 4%, this 500-point range on the Nasdaq futures over the entire month of April with ugly daily candles. Look at these wicks, big wicks up and top and doji. It's just crazy. It's just so much uncertainty. And then we get, I can make my text a little bigger here so you can actually see this. We get some nasty bear traps. So I was looking at this level 1298, basically, yeah, 1298 or almost 1300 exactly. This key level I'd been watching because you could see why this level is so important. It was this supply over here that we broke from all the way back in September of last year. You can see we bounce off of that, bounce off of it. It was resistance over here in February, resistance over here in March. Once we finally broke through that level, you could see we mounted that level and we consolidated above it. So to me, a break of that level was going to be probably a significant push down. We break that level on Tuesday of last week, and it was just a nasty bear trap. We get earnings from all the big FANG companies. They were all great earnings, or great because they beat these really crappy estimates or projections that they had. They beat that. We just shoot straight up. And then what do we get? Oh, then on Friday we get a bull trap. We get a break of this previous resistance at 1334. We break above that and we just run into a wall and we get a nice bull trap. We break above this trend line. It was looking like a nice little bull flag right here. It was looking like a real nice bull flag. We break above it. Hey, things look good. And now we just dump back down today. We had a pretty significant red day today with the Nasdaq down about 1%, S&P leading the way down. Just more worries about the banking crisis that we have right now. First Republic going to zero, as everyone knows. So also the energy sector taking a massive nosedive today. The energy sector just got hammered today. We saw price of oil, just people are dumping oil. It's crazy. So oil dumping about 5% today. Not good for the big oil companies. Exxon down significantly. A lot of companies down after that. But anyways, so looking at the Nasdaq, we have just been getting disgusting price action. So we've gotten traps on both sides. I mean, this is just your standard markets consolidating. In the meantime, market makers are going to do what causes the most people to lose the most money, which is trap on each side. And it is just crazy that we got a trap to the downside, and then not even a week later, we get a trap to the upside. And now we're back under this key level that we were trying to break, 1335. So I'm going to make it really simple. Personally, I kind of believe that it is just clear what's happening. We are just still making higher highs. Still higher high right here, higher low right here, and now followed by a higher high over there. Not really anything else to say about it, man. I mean, that's the way it is. No matter how bullish, or I mean how bearish the fundamentals are right now, the technicals are still looking quite bullish, but is just a question of how long can things stay bullish, even though the macro situation continues to kind of collapse as the days go on. I mean, the second largest bank collapse in history, really, and the market just doesn't do anything. Like, you know, all right, sure, whatever. But anyways, looking at our weekly chart, you can see where the key level, or let's go back to the daily. You can see the supply zone. This is where we rejected way back in August. So you guys remember August. Things are hunky-dory. We're climbing. We break down. We dump. Big dump on the Nasdaq. And then we kind of base here at 1286. We base at this nice little line we got right here. And then we get a nice pump, a 2% day, this day right here. I remember that. That was a horrible. I was actually on my honeymoon. I just got married that week. I'm on my honeymoon, not really paying attention to stocks. But I got married August 21st. I got married on this day, August 21st, right at the end of this rally, basically. So you can see we break that line at 1321. We try to retake it, crazy bull trap, and then that is the last time we have seen 1320 since at that point. That was the last time back in August. So that is why this supply zone right here is so important, and that is exactly where we keep bumping our heads into, right there at 1330. This range from about 1320 up to about 1340. We just keep hitting our heads on that. Boom, hitting it there, hitting it here again. So now it's a question of, do we do that again? Is the fourth time the charm? Are we good to go after numero 4? Or why can I not delete this? My guy. Oh, it's because I am not on the wrong thing. So do we just keep hitting our heads on that, or are we going to come back, retest 1300 basically, or 1298? It's gross. It's kind of gross where we're at on the Nasdaq. I'm not gonna lie. And personally, the thesis to the downside is still there, but it still looks, I mean, just higher highs followed by higher lows. That's all you can say. Now, if we look at the S&P chart, our S&P 500 futures, this chart is giving me a little bit more clarity. This one's giving me actually a lot more clarity than the why is that over there? Than the Nasdaq one. So, S&P 500 did the exact same thing as well. It gave us a disgusting bear trap right here back in Wednesday last week. Nasty bear trap. We make a big dump. We hit this demand zone at about 40.73. We hit that perfectly, bounce off of it hard with high volume. And then what happens? Then we get a bull trap. And then we run up. We break this 4,200 level for about 5 seconds. We were above that. A nasty shooting star daily candle. But you can see that 4,200 level. We just wick above it. Just liquidity sweep. Trap some bulls really quick. You can see this was where we bounced off previously. So yet another higher high with a higher low. Things continue to look to the upside. But today we come in and we kind of did a little dumping. And now you can see where we come down. This 200 simple moving average on the 4-hour chart. We bounced off that twice now, so that level has some significance. And you can see this level at 4,100 we kind of bounced off of today. But interesting, we're dumping on really high volume going into FOMC. I mean, this was super high volume on the futures. The highest volume that we have had since the 24th of March to the downside. So very interesting, but a huge wick on the bottom. So this dip did get bought up, but that's where we're headed. That's where we're at right now on the S&P futures, is we're right in between demand and supply and demand, with our supply being 4,200, and you can see why this supply is so significant. The same thing that it was, I mean, basically the exact same spot the Nasdaq futures was back here in August. Back when we dumped back in August, we base at 4120. And we push up, huge bull trap on super low volume, and then we reject off of 42.17, and that is the last time we saw 42.17. So that is why that is such a significant supply up there. There are a lot of sell orders sitting up there, and you can see what the reaction has been every time we get into the supply zone. We hit it, supply zone. We hit it, reject. Hit it, reject. Hit it, reject. Once again, reject. So we continue to at least still make these higher highs with higher lows, but that is the level to watch. We break that level, I think we see we'll see a clean move. I mean, we break this level, we get above 4,200. I think we see at least a clean move up here to about 43.30, and then we hit yet another. I mean, we just have the supply zone after supply zone, because then you can see over here, man, this is gross what we have over here. You can see the supply zone right here is just monstrous. I mean, we haven't been up here at the 4,400, 4,500 range in a long ass time. So that is why I think the path will just be to 4,300 before we hit another big fat level of resistance up here. So we see a break of that. We run up to that wall. We'll probably come down, consolidate, push back up. But that is what I'm looking at right now. For the S&P 500 futures, personally, it's bullish. It looks bullish. I don't know. What do you want me to say? We're making higher highs with higher lows. I know things are getting worse and worse every day, but things look bullish. So let's look at the setups that I like the most. So AMD today had earnings. They beat earnings, but their guidance is very bad. They're down about, I mean, it's a pretty muted reaction for a volatile stock like AMD. They're down about 5% after hours. We have seen after hours on these earnings be very volatile. We've seen stocks go up 10% after hours, then come back down and close it down 2%. Just crazy swings. So right now AMD is down about 4.5% on that really terrible guidance. And keep in mind that they beat on earnings, but they only beat because those their guidance from last year was so low. I mean, they cut it in half. So they beat on really, really shitty guidance, which is not impressive, and that explains why the stock is down. But we are still, you can see we're down to about 85 right here. I still like AMD because AMD has just been doing this for so long. What's it do? It comes up, it hits resistance, and then it comes back down, and it bases right there at previous resistance. It bases, so that resistance becomes support, and then what happens, we come up, we hit another wall, and what happens, we come down, we find support right there. We find support at that previous resistance. So what's the same thing we're doing now? We come up, we hit a wall, and we are finding support at this previous resistance zone at the 89 to about 86 level. Now, keep in mind, this has been very volatile, up and down, wonky. It's not as straight up as NVIDIA. I mean, I don't even know what to say about NVIDIA at this point. There's just no end in sight. It's just never going to stop going up. I don't know what to tell you. It's just crazy. So I know you're probably thinking, why the hell would you play AMD when NVIDIA just goes straight up? Well, because NVIDIA, that's the thing. NVIDIA has just been going straight up. It feels too stupid, but I like the pullback that AMD has had. It has pulled back about 15% now, and we just have a perfect maybe it is a bull trap. I'm trapped right now. No, but we have a really clean descending channel, aka a nice little bull flag, in my opinion, where we are just in this tight little channel. We broke out of it yesterday. We broke out of it today. AMD was a lot stronger relatively from the rest of the market until now. Of course, it's earnings, but the fact that these earnings are pretty rough, but the stock's only down about 4.5% after hours. I mean, maybe 5%, maybe 6%. Is pretty good, and that doesn't really scare me that much. So I like AMD. If it can hold at $84, if it can hold that support, I love it. But if we do pull back here and we retest this $80 zone, I'm still in it. I'm in right now. My average price is about $89 a share, but I really like it to come up here and make some new highs and break above this $100 level and eventually retest this supply zone at 102, break through that, and then we have another supply zone over here at about 110. So my target for AMD is right now from about $89 a share where I'm at up to about 110. That is where I would consider taking profit, because after that on AMD we have the same thing, just this huge monster supply, this crazy supply zone where you can see we went straight from 120 straight down to 109, and we just haven't even come close to testing that at any point this year. So that's my target on AMD. It's one of my favorite plays to the upside. But right now, Apple. So let's look at this weekly chart on Apple. Apple, this weekly chart just looks crazy. Look at this trend line. I mean, you can see this just like channel, this perfect weekly channel that Apple has been in this entire pullback. You can see, look at this. I mean, it is so perfect. It's so perfect. And we have just tapped it, rejected, tap, reject, bounce, reject, bounce. And now we have finally broken out of this channel. And Apple looks really good to the upside if it continues. This looks like it wants to continue and make those higher highs and eventually break this 176 level. Apple looks good to the upside. I don't know. There's not much else to say about it. I can't. That's the thing is fundamentally, I think things are terrible, but these stocks just keep going up. Their earnings are still holding up. And that's the other thing, is that the market is propped up by the Apples, by the Microsofts, by the Amazons. I mean, it is just propped up by these massive mega tech companies who actually really haven't been that badly phased by these interest rate hikes. What has been phased are the small caps, and small caps are still in the dumpster. Small caps are still just barely above their lows back here from October. So that is really the scary part about this market, is it is just holding on by a thread because of the Apple, the Microsoft, the Amazon, the Google, the Nvidia, the AMDs. All the Titan caps, the mega caps, over like $400 billion cap stocks are the only ones that are holding everything up. So if we start to see rollover in Apple or Microsoft or Nvidia, then that's where we'll get the real pain in the Nasdaq. Right now, though, it is impossible to short these stocks because they're just so strong. It is, everyone's pulling their money, whatever money is left on their risk-on stocks, and they're shoving it into the Apple and Microsoft and all that. So that is the really concerning part about this market. Is it's like, what if Apple does continue to roll over? What if we do start to see selling? Because we've seen selling in the financial sector. I mean, XLF down big today, about 2% today. If we look around all of our bank stocks, I mean, Schwab back to the lows. We have Key Bank down majorly today, a massive down day on Key Bank. I mean, SoFi, god damn. Now, I love SoFi as a company, but holy moly, what is going on? I mean, SoFi is a rock solid company. It's not affected by this banking crisis, at least we don't think. And their earnings, they beat on earnings, and their guidance look good and everything. But man, it's just been hemorrhaging. I mean, we went from 650 yesterday, and we closed down here today at like 490. It's just, I don't know. I like SoFi a lot. I would be buying SoFi if it returns these $4 range, or sub $4 range. That would be all-time lows, but I love SoFi as a company. I just wanted to throw that in there. Let's talk about VIX. The last thing I'll talk about before I wrap up this video. The VIX is, I know it's weird to be like, this thing is wrong, but the VIX is fucking wrong, dude. What is going on with the VIX? The VIX has returned to levels we have not seen since October of 21. And remember October of 21 and November of 21, things were just going crazy. I mean, it was pure euphoria. That was the peak of the euphoria, was October. Look at October of 2021. It just went straight up. I mean, we went from 350 on the Nasdaq straight to 400. You know how big of a climb that is? I think that was the biggest single month climb ever in the Nasdaq. I mean, just unbelievable. Absolutely unbelievable. So the VIX is telling us that things are as good right now as it was back in October of 2021. Just think about that. So the VIX is just completely wrong. Just absolutely wrong. It's unbelievable how wrong the VIX is. And I find that to be very, very interesting. I mean, just really, really crazy. So that's not the biggest monthly gain. Obviously, April of 2020 was. Duh. But the VIX doing really weird things. So we start to see the VIX. Now the VIX did push up today. It pushed up to this almost $20 level, which it hasn't been above 20 since way over here early April. But you can just see where it just keeps bouncing. It just keeps hitting this wall up at the 20s. So if we do see VIX climb above 20, that would be a little concerning. But right now, it is just completely untethered. And we are obviously in this falling channel. You can see this trend line. We just ran up to it perfectly again today. But really crazy stuff. So it's hard to look at the VIX and predict what's going to happen because it is so low right now. And it is just another reason to be bullish because of how low it is. But it just seems completely untethered from reality. It's crazy. I don't know what to make of it. The general consensus I found is that people are just confused why it's so low. But that's the VIX. I don't know. No one knows. So anyways, thanks for watching the video. Keep in mind, tomorrow's going to be very, very, very volatile. It is the Algo Super Bowl. The Algos run the market tomorrow. You're playing with fire. You're just gambling if you're trying to trade that tomorrow. It's going to be some nasty price action. But just keep in mind, on the S&P today, our support was at 408, and we have found support at 408 multiple times. You can see this little box here. We have found support there. So that's my level on the S&P. To the upside, if we can reclaim 413 to the upside, I think there could be a significant push maybe to the 417 level on the S&P 500. But really, it's just random tomorrow. It's a casino. So we'll drop a video tomorrow talking about everything Powell speaks about. And I hope you guys would please just consider dropping a like, dropping a comment if you enjoyed the video. If you hated the video, I appreciate all feedback. And please consider subscribing to the channel where I drop some daily uploads on your stock market updates. You need these updates, folks. I'm telling you, you got to be here. So anyways, guys, I'll see you on the next one. Peace.